We're going to take a look at markets on track for their 8th day of gains after its best week-long run since 2003. You're taking a look at gains across the board. The S&P up 0.2%. The Nasdaq nearing 0.2%. The market's fully recouping their losses from the early August sell-off. The big question, how fragile is the current rally? We've spoken to strategists and economists throughout the month about exactly that.
So I think what you saw Friday is people got a little bit, shocked or scared out by that weak labor market report. And that's just going to be an ongoing process, I think, over the next kind of 2 to 3 months.
It's too late to panic that much of what we saw was a short covering situation vis-a-vis the yen. Looking ahead here, I think we're going to see the market continue to churn below the July 16th high.
I mean, the markets have had a very strong comeback from that August 5th sell-off. Yeah, I think a surprise would trigger volatility and a sell-off.
And guys, just to continue that idea of the markets kind of recovering here, we know from Bank of America, they've had their 7th consecutive week of inflows into equity funds, and tech funds in particular have continued to see inflows in the same time period. And that's interesting given that tech was kind of the biggest sector that was under pressure during that market rout we saw in early August.
Yeah, well, just listen to our friend Jan Hatzius from Goldman. I'd be concerned about where this market is. And given it has rallied after that jobs report, we had Jan talking about potential tariffs from President Trump winning the White House again, leading to more inflation. You have him calling out Vice President Harris wins. That could lead to higher taxes and lower growth. I mean, none of that makes me excited about own stocks. I will say this, though, on the other side of it, a really good note from RBC's Lori Calvasina this morning. She's noting that we're starting to see growth begin to outperform value again. I suspect that is likely a function of people expecting a rate cut at that September Fed meeting, usually good for growth stocks and growth PE multiples. And number two, she also mentions the median PE of the top 10 names in the S&P 500 has rebounded to about 26.6 times, but remains well below recent highs. So maybe some investors are out there looking for bargains. But still, what Jan was telling us, kind of scares the crap out of me.
And I think that also kind of reinforces what we heard from Yardeni, what we heard from Stuart Kaiser, what we've heard from a long list of strategists and even economists who have joined us over the last 2 weeks as we try to make sense of the weaker than expected labor print, also the unwinding of the yen carry trade. And I think to sum it all up, there's a heck of a lot of uncertainty right now within the market. And investors are trying to figure out, going to Calvasina's call, what makes the most sense to buy at this point. And obviously there's general consensus just in terms of concerns about valuation. Jim Paulson, the longtime strategist, was out the Substack this morning actually making a strong argument, I thought. He was talking about the fact that, yes, we're entering this 3rd year of a bull market, but there is a lot to like when you compare to historically what happens in the 3rd year of a bull market. Yes, there are typically valuation concerns, but it's more broad-based. And here we have more of a concentrated argument, at least at this point. And he also went on to talk about a number of other factors that could really boost some of that movement in the long term. A lot of that also having to do with we're expecting the Fed to cut rates. That could be a catalyst here for the markets, potentially in the short term, just as long as the economy doesn't deteriorate too much. But I think that all points to the fact that there is so much uncertainty right now, and people are a little bit nervous here to call it too much one way or the other. And that's why we're seeing so many investors stay on the sideline.
Jim's still at this. I love Jim. I got to sign up for his Substack. I mean, Jim is
good.
Jim is really good. At the end of the day, I appreciate the market is rallying. Nothing can go down forever. But I come back to this. Is a 16% sales increase at Chili's last week. Is that a good thing? Is that a good economic sign? Does that get you excited about owning stocks? To me, that suggests a consumer trading down for a half-a-pound burger. Don't know if that's a good thing.
Yeah, exactly. And then there's a lot to support the fact that the consumer is weakening here and a lot to be concerned about in the short term. All right, Saz, great stuff. Thanks. Yeah.